Hello friends, how are you? Breaking news today. Net long positions for U.S. marker West Texas Intermediate fell for a fourth week to the lowest since October. The corresponding measure for global benchmark Brent was dialed back by the most since December in a third consecutive drop. The moves were driven both by a decline in long-only positions, as well as a build in short-only ones, according to data from ICE Futures Europe and the U.S. Commodity Futures Trading Commission. Oil has sold off in recent weeks amid a host of drivers, with traders concerned that U.S. tariffs and talks on the war in Ukraine could impact market dynamics. In addition, Iraqi exports from its semi-autonomous Kurdistan region may resume, although cartel OPEC Plus may defer planned output hikes. WTI capped 5 weeks of losses last Friday, the longest losing streak since late 2023. The latest positioning data reflects the more recent negative sentiment, said Warren Patterson, head of commodities strategy for ING Group NV, citing trade and tariff concerns, along with the push for a deal between Russia and Ukraine. Meanwhile, aggregate open interest in U.S. crude, the number of contracts outstanding, has also declined and remains near the lowest in around 3 months even after a small uptick. Investors have been pulling out of oil as U.S. President Donald Trump's deluge of executive actions disorientated traders. Most read from Bloomberg Businessweek. Shine profit dropped last year, further challenging IPO, FT says. Bloomberg, fast fashion retailer Shine's profits slumped by almost 40% last year, putting further pressure on a potential initial public offering in the UK, the Financial Times reported, citing people it didn't identify. Most read from Bloomberg. Net income fell to $1 billion even as sales jumped 19% to $38 billion, according to the report. The figures are internal projections before accounts are finalized, one of the people told the newspaper. Shine doesn't publish profit guidance, but a 2023 presentation to investors forecast $4.8 billion profit and $45 billion sales for last year, according to the FT. The retailer didn't respond to a request for comment from the newspaper. The company, which was valued at $66 billion in a funding round in 2023 and as high as $100 billion in 2022, confidentially filed papers in June for a London IPO. Bloomberg News reported earlier this month that the firm was under pressure to cut its valuation to about $30 billion. Founded in China but now based in Singapore, Shine became one of the world's most valuable startups thanks to its high-volume, low-cost fashion. The FT previously reported that the company may push its listing to the second half of the year following U.S. President Donald Trump's crackdown on tariff-free imports of small goods from China. Most read from Bloomberg Businessweek.